Hello and welcome to another edition of Investing for Generations. First of all, I want to say thank you to my first 25 subscribers. That's very amazing. It was really a jump in the last few days, and I'm so happy and excited about that. So, a big thank you to all of you. And I hope you just enjoy also this edition today. Today, I want to talk about another dividend aristocrat, and this time it will be AT&T. So as always, I want to say a little bit about the company, about the history, want to go through the financial numbers, and we'll talk about the price, of course, and the management, and we'll come to a conclusion if AT&T is a buy right now or not. So let's go. But before we start, don't forget to subscribe, like, share, and comment. Thank you. AT&T was founded in 1885 as an American telephone and telegraph company, shortening AT&T. One of the founders was Graham Bell, the very famous Graham Bell. It's the world's largest telecommunication company with a yearly revenue of almost $180 billion. And the biggest part is the telecommunication sector. AT&T has 4 units, 4 sectors. It's communications, it's Warner Media, it's a Latin America, and is a Sander. And as you see, and as I said before, the communication sector is by far the largest part with the highest revenue in this company, and so also the most important part, of course. But with the launching of HBO Max, the media sector will be even more powerful and have a bigger impact. But I will say a little bit more about that when I go through the financial numbers. As I said before, AT&T is the largest telecommunication company in the world, and also in the US, it's the biggest telecommunication service, of course. And as you can see here, it's really the largest by a mile, at least if you look at the revenue. Then just dive into the financial numbers. So AT&T have a very high dividend yield of 6.76 with a payout ratio of 64.77%, which is not too high. That's a good payout ratio. I like this. I think this dividend is very, very safe. And as a minus, of course, the dividend don't grow a lot lately, but the dividend grow for 35 years now, and so it become a dividend aristocrat. And just like the dividend don't grow a lot, also the revenue didn't grow a lot in the past. We see here, yeah, there is a growth, but really, really slowly, and this is not very spectacular. AT&T also have solid margins and small returns, but it earns money all the time. So that's a plus, but as I said, it's not a very spectacular number, and it's not like a fast-growing company. For sure not. It's more like a big ship. So then just take a look also at the balance sheet. And the balance sheet is not that good. There are some warning signs, and this is just because of the debt, and the debt the company just had to take to buy Time Warner. So the balance sheet don't look that good right now. The current ratio, we can see this here, is just 0.76. This is not what I like. I like a current ratio at least over 1, but even better over 2. Here it's under 1. That's kind of a warning sign. That's not good. Also, the total assets to total liability ratio is only 1.54. I also like this a little bit higher, at least over 2. That's not that good as I like it normally. And also, when we look to the long-term debt, you see just the jump in 2018. This was when AT&T bought Time Warner, and they had to take a lot of debt for that. And now the debt just continually decrease again, and hopefully it will just go this way. And this have to be one of the big goals of this company, because the debt right now, in my view, is just too high. And that's also the big thing right now with AT&T is the buying of Time Warner in 2018, and then the launching of HBO Max. Um, and the buy price for HBO Max was a little bit over 85 billion. And AT&T also have to invest more than 4 billion in the next 3 years. So there is a lot of investing upfront, and hopefully they will make some money in the future with that. There is, of course, there's a market with the streaming providers, but it's a very competitive market. They have to face Netflix, they have to face Disney Plus already, of course, Amazon. Um, so if I look to the content of AT&T, I'm not so sure if they really have a good position there. Of course, they have some series like Friends in it, but I don't know if I look to the content of Netflix, if I look to the content of Amazon and Disney Plus for sure. I don't know if AT&T can play at the same level. And the estimate for the subscribers for HBO Max is that it could be 20 million subscribers by 2024. And this is even a way smaller number than Disney Plus even have now. Disney Plus now, after 5 months, if you remember my video, have now over 50 million already. And they estimate for Disney Plus it could go to over 200 million. So I think this is just another level. Let's take a look at the management. The current CEO, Reynolds Stevenson, joined AT&T 2005. He is a CEO since 2007, so he stick with the company for a long time. As you already know, I like that because there is kind of a relation to the company, and I really like this. And when a CEO is so long there and is so long the CEO of the company, I also look at the stock price since, and let's see what happened there. And as we can see here, the stock price of AT&T, jumped between $25 and 40 in the top, and it just got go up and down. But really, this is at the end. There is no gain of value over, what is it, 13 years. I don't know. It's just not impressive. It's just not an impressive performance at all. And so I don't know what to think about this management. Let's talk about the price. My calculated intrinsic value for AT&T is $30. I bought my shares on 2 days, in the 2nd of March and the 9th of April, as you can see as a green arrows. And the average of my buy price is $29.96. So I'm almost equal right now. We will see this also later when we take a look at my portfolio. I think there is not a lot of upside. Depends a little bit what happened to HBO Max, of course. But even more important for me with AT&T is I think there is not a lot about of downside. AT&T is more like a basic investment. It has a nice dividend, and this makes it really attractive. My goal is to hold AT&T for a long time and just have kind of a passive income stream with AT&T, and maybe if we have another crash or even a very volatile market at all, I hope that AT&T will be a little bit of stabilizer into my portfolio. So what's my conclusion? So with AT&T, I have the biggest telecommunication company in the world in my portfolio. That's a plus. That's good if you have a company with this size and which earn even money all the time, even if it's not that much right now. We also have a very solid dividend payer and dividend aristocrat, which, as I said before, should stabilize my portfolio. And that's a goal for AT&T. That's a reason why I bought it. I don't expect very much gain in the stock price. The negative, of course, is a slow growth. I mean, what's a plus? It's a minus. Just a big ship, and don't turn that much or don't move that much. And what's really concerning for me is a relatively high debt. Then take a deeper look into my portfolio. After I made a lot of stock analysis lately and don't gave you an insight in my portfolio, I will do this today again. And as you can see, almost all my positions are in the plus. Only Medtronic and Wells Fargo are behind. And yeah, this looks very good. This looks very nice. And even AT&T is a little bit in the plus. And also I get my first dividend payment with AT&T, which is nice. And just do what I expected. Then I want to show you also my proportions in my portfolio again. And you can see AT&T has kind of a big share in this portfolio. As I mentioned before, I think after all I have too much positions. For the one reason or the other, I'm very happy with all of these companies. I also want to show you again my performance compared to the S&P 500. As I mentioned before, this portfolio started at the 2nd of December 2019. And just lately, the last few days, and also with the addition in this portfolio with AT&T and Wells Fargo, my outperformance is just not that high anymore as before. But it's still nice. I still have an outperformance of over 17% against the S&P since start of December 2019. That's nice. That's a good number, even if it's just a short term, of course. So that's it for today. I hope you enjoyed. Was just another step to show you all my portfolio, and we will see soon with another video of another stock out of my portfolio. So that's it for today's edition. I hope you enjoyed as I did. And don't forget to subscribe, like, and hit the notification bell so you will never miss an episode again. See you soon. Take care. Bye bye.